One of the factors that could help accelerate the panic is the ascendancy of index funds, also known as passive investing, where people put their money in a single fund that buys all the stocks of a certain index, like the S&P 500. These funds are supposed to mirror the performance of the index, which might have been true when they were a tiny portion of the market. Today, roughly 50% of stock market investments are now held in these kind of vehicles. I repeat, 50%, or roughly half of all the investments in the stock markets, are held in index funds. That's a huge amount. That means these funds aren't mirroring the market anymore. They are driving the market. Their presence greatly amplifies any shift in prices, for better or worse. Index funds helped inflate the market during the past boom, and they will help sink the markets in the coming bust. So if you don't know about index funds, let me give you a little primer. They hold only the stocks that constitute a market index, like this S&P 500 or the Dow Jones Industrial Average. If you put your money into these funds, the fund managers have no discretion. They have to go out and buy the underlying stocks, regardless of the price. Presumably, they do this on a daily basis based on the cumulative inflows and redemptions on that day. Their demand for stocks in the index has nothing to do with how well each of the individual companies are doing. It's strictly a function of new investments coming into the fund. That's why it's called passive investing. No one is making any decisions compared to active investing, where a fund manager is looking at the actual performance and prospects of the company they are buying. In the past few years, passive funds have vastly outperformed active ones. I think it's because active managers see how irrational current markets are and are sitting on the sidelines while passive funds are completely blind. The index funds form a self-reinforcing loop. As long as these funds go up, small-time investors keep putting money into them, forcing these funds to buy more stock, which continues to inflate the prices of those stocks far beyond any normal valuation. Now, this is great for index fund investors on the upward side of the roller coaster who experience these huge gains on paper. They don't realize that the same thing can happen in reverse. As soon as investors get scared and start pulling money out of index funds, these funds are forced to sell, which will accelerate the downward trend. As the market falls, more investors get scared and pull their money out, which forces more sales and further depresses prices. It will be a self-reinforcing cycle that could really, truly end in a 80% collapse. So that's what I confidently predict will happen. I just can't tell you when.